Okay, once again, welcome to today's session, right? On today market topic, which is trends, right? Market trends, very very right. First of all, what are market trends? Now, listen carefully. When you have price moving across time due to supply and demand, then this creates trends. This section is a discussion about trends and how they form and how many type of trend and what kind of structure trend have. Now these trends actually have structure, right? For you to become a pro analyst, right, you need to be able to interpret the market, right? You need to be able to interpret the market, right? Very, very important in terms of these market trends, right? In terms of these market trends, whether crypto market, whether stock market. So if I give you let's say another chart entirely like stock markets, right, you should be able to analyze that pair very well, right? So without let's go deeper, right, into what it is. Right? It's very important. So right, so let's look at market trends. So today's example, right, we're going to talk about we're going to be using the pair Australian dollar versus United States dollar, right? Very very important. So first of all, right, we're doing price action here. So listen carefully. When price actually moves up, it's actually called an uptrend. Then when price is moving down, it's called a downtrend. Then when price is actually moving sideways, it's actually called a sideways trend, right? Very very important. Right, it's actually called a sideways trend. Okay, so this is actually called an uptrend, right? So in the place of using the word buy trend, right, the right word is actually uptrend. Take notes. I think when we're doing terms used in trading, I think we made mention of that, but we said it's bullish market. You can call it a bullish market. You can call it an uptrend. You can call it which other name can we call it again? We have bullish markets. You can call it uptrend. Right? When we're talking about during the terms of trading, I'm working with trending markets. So we said that the markets will move in different trends, uptrend and downtrend, right? I don't know if Comer actually explained that, but during that terms in trading, the word trending markets were actually part of those terms. And the market can either be trending upward or downward. So when the market is trending upward, it's actually called an uptrend. When it's trending down, it's actually called what? A downtrend. So this is an example of what we mean by a bullish market or an uptrend, because while the market is actually moving to the upside, market has bought all the way up. You can see right here, this is actually a bullish trend or a buy or a uptrend, right? Very very important. So now let me look at example again, right, and show you guys what a buy trend or rather uptrend actually mean. So let me look at NZUSD, right? You can analyze any pair as far as you know what you are doing. You can analyze any pair in this world and you become a good trader. So if you look at this one, this is an example of an uptrend. When the market is trending upward, it's called an uptrend. When the market is trending downward, it's called what? A downtrend. So this is an example of an uptrend, right? The market is actually moving in an uptrend. And an uptrend, what actually makes this an uptrend is not because it's going up, basically. Because normally when you ask anybody, why is this thing called an uptrend? Normal as a beginner trader, you will say because it's going up, right? But there is a big explanation to why it's actually going up, right? It's not because it's just going up, you understand? And that's what leads us to structure. Please take note, that what leads us to what? Structure, right? According to a man called Charles Doe, he gave a theory which I will explain briefly, that talks about these trends actually having a certain price structure that tells you whether the market is in an uptrend, downtrend, or sideways trend. What I'm about to explain to you guys tonight, right, is a very, very important topic that if you have missed it, sorry, forget about price action or trading. You understand? Because it's very, very important that you actually grab the concept of what is a trend and structure, because this trend basically, they are not just called an uptrend because they are going up. No, they're actually called an uptrend because they actually exhibit a kind of price structure, which I will explain in a short matter of time, right? So this market actually move in this certain way, not because they want to be called an uptrend, but because they follow a certain price structure, right? So an example of an uptrend is that the market actually makes a movement called higher highs and higher lows, right? So for an uptrend to be actually called an uptrend, right, or a bullish market, it must follow a structure. And what is that structure? Higher highs and higher lows. So definitely, right? So let's look at something. What do I mean by higher highs and higher lows? Now, what do I mean? Higher lows and higher highs are what forms a or an uptrend. Now, let me give an example before we go to the chart. Right? So, first of all, this is what an uptrend look like. And one thing I will tell you guys about trading is that don't expect market to just buy. If it's going up, you just go up once. No, trading does not work that way. You will never see this kind of move happening on the market, or you will not see the market just dumping once. No, it cannot happen that way. Market does not follow that way. Market actually follow the Doe theory, which was brought by a man called Charles Doe. Right? He was the one that propounded that theory. The market must follow that structure, right? And for a bullish or a bearish market to be formed, you must actually follow that structure before you can think of saying that, okay, this is a bullish trend or an uptrend or a bearish trend or a downtrend. So the only thing that can actually make market to actually dump massively is only news events. Take note, the only thing that can make market to move massively, and it's not going to move like this, at least let's say dump to something like this. It's not actually going to move down. No, it's only news events. During the Russian and Ukraine war, that was in 2022, if I'm not mistaken, I was into trading that time. I think I just started, I was still learning, but I think I was still trading live that time. I was still a newbie though, and I observed the price action during that period. Right, the price action during that period was that when the war was happening, the market was actually dumping. You see people like EURUSD, GPS, they were just dumping. They were just selling. Like you can just look for any point and start selling. You'll just be making money. So market was just moving in that free fall scenario. But the only thing that the market was doing, if you understand structure, the market was following structure, but it was still dumping. Like it was just easy. Market will not make a slight structure or a slight retracement and it will start dumping again. Let's say something like this, it will move down, it will now go up small, come down again, go up small, come down again. This is how the price action was for GBP USD and Euro USD at that particular point and during the Russian and Ukraine war when it first started, right? So that's it by that. So let's explain structure in full term. Now, for a bullish market to be called a bullish market, like I said before, it must form markets higher highs and higher lows. So this is how a bullish market actually is, or an uptrend actually is. It will first go up, it will come down, go up, come down, go up, come down. You may have observed this thing on your chart. If you have opened your trading view before or your MT5 platform and observed the chart, you will see the market actually moving in this kind of zigzag formation. It's not actually called a zigzag formation, it's actually called a higher high and higher low formation. So as a trader, right, let me indicate it right here. Where is our higher highs and higher lows in this structure? Where is our higher highs and higher lows in this structure? So as a trader, where is our higher high? This is our higher high. This is our higher high. This is our higher high. H, and this is what? Our higher low. HL. Right? Are you guys following? That's our higher high. Then this is our higher high again. Another higher high. Market will just be forming higher highs and higher lows just like that. You understand? Then this is our higher low. Right? Then higher highs again. HH. Then higher lows again. So as a trader, it's all about knowing when to buy. Now the market will present itself in this kind of structure. How do you buy, or when do you buy? As a trader, you ought to be buying at a higher low. Now take note, in trading you actually buy low and sell high. You buy low and you sell high. Take note, you buy low and you sell high. So if you want to buy in this kind of bullish market or uptrend, where do you buy, or what point do you buy? Is at the lowest you buy. When price is actually cheap, that's when people want to rush it, and that will actually cause demand. Like I said in the previous class, when price is low, that's when it's easier to actually buy. You understand? But when price is actually high, so like our Nigerian market for instance, when things are cheap, people want to buy. But when that will actually cause demand, people will be rushing that particular commodity. But when the price is actually too expensive, people will not want to buy, and sellers have no option but to bring the price down. So price will start dropping. That's the same thing that happens on the forex market, right? So you cannot be buying when the price is high in trading. You are doing yourself more harm than good. Right? You cannot be buying high. You ought to be buying low. The only time you can be allowed to buy high is if the market is actually forming. Let's say there's a news event and the market is just buying, let's say like gold or one volatile pair like Bitcoin, and the market is just pumping up. I would say gold for instance. Let's say gold is just buying, and it's not giving you where to enter. Then you can just look for a good higher high or a very good slight retracement of the smaller time frame and start buying, because market will not actually permit you to actually buy when the market is too much in volatility in terms of buying massively or aggressive to the upside. You understand? This happened in rare occasions, probably when there is war events. I think 2024, yes, Bitcoin got to its all-time high. That was about 100k, and if you could not catch an entry on Bitcoin at that particular point in time, let me see if I can get that price action for BTC USD 2024, when Bitcoin was at 100k. Alright, so looking at the price action for Bitcoin, right, that was in 2024. Observe my down part of my screen, that is this part where the months are. Observe this part. You can see that that was in December 2024. Bitcoin actually got to its all-time high. That should be somewhere around here. I remember that was November, November. So you can see that November 2024, if you pinpoint the price action, Bitcoin was just buying aggressive, and you can see the price it got to at 107,000 traded for one BTC, right? So imagine you were just trading this particular pair and you couldn't really get an entry, right? Because the market, you can see the massive buys, aggressive buys to the upside. And you can just find an entry and just start buying. You are not wrong trying to actually buy the market at any point. So me, I can even say, okay, price is too expensive. Like trying to buy here at some point is too expensive. You understand? But the market was too volatile at that point, and Bitcoin was just going up. It was just going up, and you can just enter for a buy. But I would advise you wait for a retracement at the smaller time frame. What do I mean by retracement? Let me explain. I'll go back to that NZD USD video, chart, right? But when you're trading in a particular market like this, like I said before, you don't buy high, but in a particular trend like this, you can just look for a nice entry, a slight retracement, and start buying. Actually, let me look at let's go back to NZD/USD from what I was showing you guys just now. So now this is the higher time frame structure, right? Market is making higher highs and higher lows. Now what do I mean by retracement? Retracement is just this sell you are seeing, or how I explain retracement. Take retracement as let's say for example, before a car that is on a journey, that is driving, before the car will get to its final destination, it will first refuel. Before it gets to its final destination, it will first maybe park to the driver may want to go and get food and stuff like that, because the car cannot just drive from one particular state to another without stopping, maybe for fuel, to refuel or something like that. So that's how the market actually moves. The market cannot just be buying once. The market has to refuel, it has to rest. You understand? In the place of market resting, that's when it starts giving retracement. You understand? That means I was giving retracement. So those retracements are where you should be entering. So let's say for instance the market actually gave the higher high right here. So at first, or as a trader, you ought to be buying low. So this higher low is where you should be looking for buying opportunity. Take note. This higher low is where you should be looking for buying opportunity, and you can enter somewhere around here. You should be buying this particular pair somewhere around here. You understand? The higher low is just the retracement, right? Market will always make retracement. Now let's look at a sell scenario or a downtrend market. Now for a downtrend market, what does the market does, right? First of all, the market will not sell once. It will first do what we call retracement or structure, the follow structure. But in this case now, according to the Do theory, it's not going to be following higher highs and higher lows again. It will be following what we call lower lows and lower highs. So it will have this kind of movement. It's not a zigzag movement. It's just market following structure. If you really understand structure, trust me, you will become a very good price action trader. Structure is one of the main parts of price action. Aside from candlestick, right? Structure is very, very important. If you don't know your structure, your candlestick analysis is nothing, right? So the market in this particular structure or market, we actually make what we call lower lows and lower highs. So this is actually our lower lows, LL. Then these are our what? Lower high. Right. So what we are following, these are our lower lows, and this is our what? Lower highs. Right. So the market will just be making those movements, lower lows, lower highs, lower lows, lower highs. So remember I said that we are to buy when the price is high. So it's at a lower high you should be what? Selling. You should be selling at what? A lower high. Put your stop loss beneath that zone and look for sell opportunity. Right? Because you have to follow structure. Right? Okay, let me use how to catch this particular. Let me use this one right here. Right? So because we have already established that the trend or the structure is bearish, following a lower low and lower high, right? Market has to what? Sell from somewhere around here. But before it will sell, it has to form a retracement, which is this push up right here before selling. It's not going to just start dumping and start selling like that. There has to be some resting, like market actually taking a break before continuing the sales again. If you understand structure right, you become a very good price action trader, right? So the lower highs, like I said before, our point you should be what? Selling. So you have to observe first of all, you have to observe as a trader, what is the first thing first as a trader when you start analyzing the market is to know the trend and know the structure. What is the trend? Okay, the trend is bearish, or the trend is bullish, or it's an uptrend or a downtrend, right? And what is the structure saying? It's saying or giving a lower low and lower high formation, or it's giving a higher high and higher low formation. That's it. That's the first thing you need to tell yourself as you want to analyze what is the trend, what is the structure. Because if you can know the trend and structure, all you have to do is to position for where to buy or where to sell. Let's say for instance the trend is bullish, So in a bullish trend, you should be looking for buying opportunity, right? Because the market is really bullish trend. And take note, as a trader, never you go against the trend. In fact, one thing that makes it easier for you to analyze the market is the knowledge of trend. Because if you can analyze or know what the trend is saying, everything will become easier for you, right? Because you can know that, okay, yes, since the trend is bullish, I'm looking for only buying opportunities. You will know what to look for in the market because the trend is bullish. So let's say for instance the market is bullish or forming a bullish structure. As a trader, you should not be going against the trend. Take note, the trend is your friend, the trend is your guide. So if the trend is giving a bullish structure and you're looking for sell, you're wasting your time. You will just end up losing, right? You end up losing, right? And that's it about this, right? So let's go to the real life chart and see for ourselves, right? From what we're explaining before. Now you can see on this chart NZUSD, right? We had this higher high, higher low, higher high, and higher low. You can see the buy, higher highs, higher low, higher high, higher low. This is a bullish trend, right? So expect movement like this. So since the structure is bullish, what am I to expect? I'm to expect buys around this zone because structure has not been validated. I'm going to teach you about change of character very soon, right? So we are not yet done, right? So let's look at another. Let's look at this one again right here. This is a bearish trend on the same NZUSD, and we had this lower low, lower high. You can see lower low, lower high. So you can see that I took a trade. This was this should be last year price action, and this was the trade I took, and it was following that same lower low, lower high, lower low. So we can see that I took my entry on a lower high, not lower low. I didn't take my entry from here. If not, I would have just been stopped out. No. You can see that the market actually followed the DOE theory and actually was pushed up for a retracement then before it started selling. You can see how easy it is, right? Following structure, right? So we had that lower low, this lower high, this lower low, this lower high right here, lower low again, lower high, lower low till the trend after I finally shifted structure. But you would have been able to, if you know what you are doing, you are able to like make money from this trade. Now let me show you one trade I've been sharing on my Telegram group, right? For those in the mentorship group, you actually profited from that trade, and that was on GBP/USD because GBP/USD has been following that structure, that good structural move for us, right? And it's been a very good structure, right? That I didn't really focus much on NZUSD, but you see GBP/USD, I really focused on GBP/USD, and GBP/USD actually followed the kind of structure I wanted, right? And that was on the 4-hour time frame, which was here. Now you can see my entry, right? You can see my entry. This was my first. It was my first sell entry. Then this was my second sell entry, third sell entry, and fourth sell entry. So you can see that I have actually been doing very well profitably on GBP/USD for the past months. I've been very profitable on GBP/USD, right? Till this trend, even when the trend actually shifted to a bullish trend, I was still catching the shifting of the trend, right? Very, very important, right? So you can see that just by following structure, you will become profitable, right? First of all, know what the trend or structure is saying. Once you start having your first lower low, lower highs, once you start having that, look for the next thing is a retracement to actually catch the sell. Very, very important. A retracement to catch the sell. So you can see that the market, this current market, I think this was February, March. The price action for GBP/USD was very, very sweet and was very profitable for me, right? So you can see that there was this lower low, lower high, lower low, lower high that I caught from, because already established that the market structure is bearish, right? So lower high, lower low, lower high, lower low, lower high, lower low. You can see that just by following, it looks like a zigzag movement, but Some people tell me that, oh, Enzo, this your chart or trading looks like a zigzag thing, like just moving up and down, but they don't really understand what is actually going on. It looks confusing to them when I tell some people that this is how it actually works. Kind of like look confusing to them. You understand? Because they are not really understanding what actually happens on the forex market. They think, okay, maybe it's just zigzag stuff. No, it's not a zigzag stuff. It's not confusing. The chart is not confusing. I know that at first it may look confusing to you that what is happening, what is this that is showing on my screen? Why is it moving zigzag? What's happening to the candlestick? It may look strange to you, but when you start understanding the key details behind everything that's happening, then everything becomes a piece of cake for you, right? So this was the trade I was catching on my Telegram mentorship group, right? Then let's look at a bullish trend, because I'll talk about a bearish trend. Look at more bullish trend, and I think we have one right here. Now we have one bullish trend right here. Now simple, very easy, right? Know your structure, know your trend, right? This is a higher high, higher low, higher high, higher low, higher high, higher low, higher high. So tell me why you'll not be profitable in this particular trend or structure. No, tell me why you'll not be profitable. Because then the market is there for you to see. Just simply follow the structure, follow the trend, and you'll be profitable. I didn't really trade this pair GPSD that much. You can see this one right here and this one right here and this other one. But when you follow the trend, follow the structure, it becomes easy for you. That's why as a trader, when you have the knowledge of what the trend is saying, you are at an advantage first of all, because you knowing what the trend is, it becomes easier for you to locate opportunities on the market. Why is that? Because the trend is uptrend, the trend is bullish for you, so definitely more buying opportunities for you, right? Like I said before, think of the market as a traveling motor or a traveling car. Before it gets to the destination, it will first reform, let's say like 2 to 3 times. You can see that this GBP/USD, look closely, GBP/USD did not actually buy once. You can see that it did not actually buy straight line buy. No, it's a lie. Market will never do that, except it's maybe a news event that will make markets buying like that. But even if there's a news event, there will be some slight retracement it will first do. You understand? So you can see that this GBP/USD did not just buy once and start buying like that. No, it actually did what we call retracement, higher highs, higher lows, following structure. The only just to be looking for buying opportunities, and which I'm going to show us as we progress in the course how to catch buying opportunities or selling opportunities on the market, right? Very, very important. Right? I think next week we're going to talk about change of character, right? Because I can't really see everything in just 1 hour, right? Because you ought to know about change of character and how market shift structure from a bullish structure to a bearish structure, because you cannot just have bullish structure throughout. No, it does not work that way. Look at GBP/USD. You can see we have bullish structure here. Then look at here we're having a bearish structure. So you can't really have bullish structure and bearish structure happen all the time. Look at this one now. We have bearish structure right here, and now we are now having a bullish structure right here. So you're not expected to be having bullish or bearish structure every time, or like you cannot be having bullish structure only on a bearish structure. Even let's look at the popular pair XAUSD gold, right? That's the US gold. US gold has been pumping up for a year now. Gold has been buying massively, right? Markets, when gold got to its all-time high, I think that was earlier this year or late last year. Now look at XAUSD on the daily time frame, right? You can see how the market was buying. Market got to 5,600 gold per ounce. You understand how gold actually moved? Like one gold per ounce was equivalent to 5,600. Yeah, this is the price level you can see. So this is how market actually was bought to the upside, right? So you can see that market was just bullish, just following that structure of higher highs, higher lows. Right? Okay, look at this one right here. Look at this price action right here. This one, you can see that it was moving up, but there was a retracement, smaller retracement, push up again, smaller retracement, push up, just like that. You can see how markets did before it got to 5,600 ounce per gold. You can see how massive that was before market started selling back again. Now we are seeing a decline on gold before market started selling back again and stuff like that. So you can see that if you know your structure, if you know your trend, everything becomes easy for you. You understand? Everything becomes what easy for you. First of all, know what the trend is saying, know what the structure is saying. Right? The market will always print out a very nice structure for you. And like what we said before, we have uptrend, we have downtrend, then we have sideways trend. Right? I don't want to talk about this one that much because it's not really an interesting price action to like want to know or trade with. When I mean sideways trend, let me just give a brief example. What I mean by sideways trend. Now let me look at let's look at USD card. Let's go to the 4 hours time frame. What do I mean by a sideways trend? I think we've had this term when we talk about terms used in trading. We talk about sideways trend before. I don't know if Kwame talk about that, but I believe we might have talked about that before. What do I mean by sideways trend? Sideways trend is just a trend that the market will just go up, come down, go up, come down, go up, come down. That's it. It's just being moving up and down. No clear direction. Right? This is a sideways trend, and this is a bullish trend. This is a bullish trend. Now tell me which of this structure or trend is looking more interesting to trade with. Right, you can unmute your mic. This particular trend and this particular sideways trend, which one is more interesting to trade with? You can answer the question about unmuting your mic. I'm asking a general question. Which of this particular trend or structure is looking very interesting to trade with? Right, we also have the bearish trend also. You can unmute your mic, guys. Let me know if you guys actually know what you're actually doing and if you are following up. But to me, as a price action trader, you should not be trading this when you have a very nice uptrend market or a nice downtrend market, because this one, you know where the market is coming from, so you can be able to predict where it's going to. Remember when I started trading and when I started this class, I said that price action helps you to know where the market is coming from, to be able to know where it's going to. So if you know where market is coming from, so and to an extent of high degree of accuracy, you can be able to see where it's going to go next. But this price action right here, this sideways, is just moving up and down. It's not going, there's no a bullish trend or a bearish trend. Market is just moving up and down. It's just going up and coming down. Right? It may look easier to trade because you know that if market come here, you just quickly sell. Then you close your sell and start buying here. This is what I mean. If market come here, you will sell. Because it's easy. Because you know that if market come here, it will sell. If market come down again, you buy. But that's not really an interesting price action. If you want to really enjoy the beauty of the market, focus on actually knowing what the trend is saying and the structure and follow suit. Right? That's a very beautiful price action to actually trade in the market. The uptrend and the downtrend. Right? So I say that next we'll talk about change of character, how market actually shift from a bullish structure to a bearish structure. Right? That we'll talk about next week, Monday. But there's going to be an important topic for all of us that I believe we all should know. I'm going to be doing a thorough breakdown on that topic, but that will be during the week. I don't know, it may be on Monday, I don't really know, but I think it should be on Tuesday. I'm going to be doing a quick breakdown of type of traders that we have, or type of trading we have. Remember, we said that we have two types of trading. We said we have technical and fundamental. But I know what I'm talking about. I'm talking about type of traders or type of trading technique. We have day trading, scalping, swinging, and position trading. I'm going to be explaining for you guys what these four things actually mean, or these four techniques actually mean. right? Because it's going to help you as you progress in the course, the kind of trader you want to be like. You start finding out the kind of trader you want to be like and how you position yourself. If you're a busy person, take note. We need this information. If you are not so busy, you need this information because trading, right? What I've observed is by not being too much on the chart, we bring some high level of profitability. Does not mean that you must be on the charts 247. I think I've said this thing before. It does not mean that you must be on the chart 247 trying to make money, trying to buy and sell. I think during this week, I only traded once. That was on Wednesday. I think Wednesday or Thursday. On Monday, I did not trade because I did not see a clear opportunity. On Tuesday, I did not trade because I did not see a clear opportunity. On Wednesday, I didn't see opportunity. So on Thursday, which was yesterday, before I took my first trade of the week. So you can see that how boring trading may be like when you are not making money, because you have to make money every day, but it's not like that. You understand? Some days you actually lose, some days you make money, and some days when you are let's say you're a busy person, some days you may not even have time to analyze the market, and some days you may even be off the charts when you don't see opportunity. You are not supposed to be forcing trade that this thing must buy, this thing must buy. No, it does not work that way. You have to let the market breathe, go back, come back, analyze and execute. You understand? So that class, we're going to be explaining, we're going to be explaining the kind of traders we have that's going to impact on the kind of trading technique you are going to use as a trader. Very, very important, right? Very, very important. So before we wrap up for today, let me just show you guys one more example on a bearish structure on USD card. This was a very beautiful price action that the market actually formed for us, right? A very beautiful price action, and this was it right here. So you will see that this trend or structure is in a bearish structure rather, and the market is moving downwards. Take note, lower low, a lower high right here, lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? So because you know that the trend is bearish, you can be able to predict that this year will keep on selling. Unlike that sideways trend that is just boring, just go up, come down, go up, come down. But if you know what you are doing, this kind of setup, right? Just hold the trade for days, just be selling. I'm going to show us how to do this thing, how to trade market like this, because this is one of the sweetest market structure you can find, or the kind of trade you should be taking. Don't trade a choppy price action, or when I mean choppy, like the direction is not clear if it's a bullish trend or a bearish trend. It's just moving up and down, it's just ranging. Remember that word ranging should not be strange to you. It's actually part of the terms used in trading, right? So that word, or that when the market is moving in a ranging way, you should not be on that market because it's very, very boring to actually trade such price action, right? You should be trading in it's very sweet trading the kind of structure. Like I said before, first know what the trend or know what the trend is saying, know what the structure is saying, then you can be able to, like, with some high degree of accuracy, be able to predict a buy or a sell. Very, very important, right? Very, very important. So this is what we'll draw the curtain for.